Tired of getting caught in fake breakouts or guessing trend direction? This strategy pairs classic chart patterns with MACD divergence to catch cleaner and earlier trades. This setup uses two main tools, price action patterns and the MACD divergence indicator. Price patterns like double tops, giant bottoms, head and shoulders, and breakouts show where the market might reverse or continue. MACD divergence confirms real momentum change, meaning you're not just guessing based on pattern alone. Buy setup first. Identify a bullish reversal pattern, like a double bottom or inverted head and shoulders. Next, check the MACD. You must see bullish divergence. Price makes a lower low, but MACD makes a higher low. When both align, enter long at the first candle close above the pattern breakout. Place your stop loss below the pattern's swing low. Target a 1.2 risk to reward or the next resistance zone. Sell setup. First, spot a bearish reversal pattern, like a double top or standard head and shoulders. Then confirm bearish MACD divergence. Price makes a higher high, while MACD makes a lower high. Enter short on the break below the pattern's neckline or confirmation candle. Place your stop loss above the pattern's swing high. Target a 1.2 reward or the next support zone. Never trade a breakout before divergence confirms momentum. MACD divergence helps you filter out weak patterns that fail, keeping you in higher probability setups. This strategy helps you spot real turning points with pattern clarity plus momentum confirmation. Download the free indicators and ready-to-use templates at forexmt4indicators.com and start trading smarter today.